and welcome to our next presentation now with Seafire. And as always, we have with us CEO Johan Bernersten here in the room. He will give us a presentation, roughly 20 minutes, and we will follow that up with a 5 minutes Q&A. Myself, my name is Max Bacco, and I am an equity research analyst here at ABG. And with that said, Johan, please go on with the presentation.
Thank you, Max, and nice to be here. Seafire, we have been running this company 6 years now. We have 13 companies, all operating in niche areas. Those companies have been acquired since 2016. It's SMEs with sales about 50 to 200 million SEK in revenues. All are profitable. We have a clear investment strategy and also value creation strategy to create further value with organic growth and organic EBITDA increases. We operating with key financial targets, business plan. We have 2 main programs to improve our businesses: a steady improvement and also sales academy. We're mitigating the risk in investing in those SMEs with CEO succession and transition. 12 out of 13 companies have changed CEOs since our acquisition of the companies. And we're also building governance structures in order to take care of the SME problem with the operating risk and also acquiring companies from entrepreneur. We have a very good deal flow, both proprietary deals that we have sourced ourselves, but also from advisors in the market. About 1/4 of the deals have been proprietary so far. Our pro forma revenues are now up to 1 billion SEK. We have grown 11% since 2015. With that said, we have acquired companies with good growth and maintained that, even during turbulent periods like the COVID pandemic the last 2 years. Our EBITDA pro forma is 140. Last quarter, Q2, we had 23% organic growth. Coming into the team, I started Seafire. My background is from private equity, 15 years within Capman Group, and also a short period with investment banking at Pareto Securities. Jacob Persson joined as CFO in January this year. He has a background from Ambea, where he was head of group, business control and IR, and also expanded the management team with Marcus Åkerstedt. He's head of industry segment. We acquired his company in 2019, and over the years he has served in 5 companies, board of directors in 5 companies, before he joined as business manager in March. Our board of directors, Joakim Berner is the chairman of the board, and also Lennart Jakobsson. They have been around since the beginning, the start of Seafire. Worked with those 20 years before Seafire. Todd Landau and Louise Nicolas joined 17 and 19. Louise has background from VBG and also Volati, similar companies like Volati, like Seafire, with very good expertise and know-how. Sarah Wallin joined in last year, 2021. She's mainly have a very good network on the West Coast. And Marcus Söderberg, appointed this year, he's CFO at Bufab, with very similar experience building up a company with decentralized governance model. So this is the board of directors. Coming into our financial performance, we have been growing, as said, more than 10% over the years. We have a very clear strategy in achieving growth, and our target is 10% at least. Also, our EBITDA pro forma has grown almost 17% over those years. So we have have a scalability effect, increasing the EBITDA even further or more than the organic growth. With this said, also we have actually invested significantly in the teams. We have recruited about 20 sales reps since each acquisition in the total group, so 1.5 per company. With that, I think we have a very good buffer for a more tougher environment. We'll come back to that later. Our portfolio, we have almost all companies have very few competitors in the market. More than 50% are characterized in sustainable construction supplies. With that, we mean companies that are serving the industry, construction, both automotive manufacturers, but also buildings and infrastructure. So there's 7 companies serving that market. And then we have a number of niche companies with own products, own trademarks, serving Nordics or the worldwide business. So all companies are profitable. We have 2 companies have less than 10% EBITDA level. It's Linguacom and Nordbutiker. We're working on that. But all other companies have a very good sustainable EBITDA level. Going into our operating model, which we focus a lot on, and that means that we as an owner and a group of companies can create even further value for each specific company. Leadership, we have a CEO network. We're adding expertise to each board of directors. For example, Lars Vrebo joined Tor Ahlgren as board last year. He previously have served as head of manufacturing and supplies at MAN and also Volvo Cars. We also have a development path, as said, steady improvement program. That means ESG program or sustainability. It means ISO certification, automation, and following KPIs. And that Marcus Åkerstedt, he's responsible for that. Marcus has a very good track record in lean production, and that we also add to our companies. The other part in our development program is Sales Academy, and that means both that we're recruiting sales reps to all the teams, all the companies, but also we educate and improve the way of working when it comes to marketing and sales. So this is our foundation as a group, which we are working a lot on in order to create growth, increased profit levels, and taking market shares in each specific market. ESG is very important for us. We have spent a lot of time and resources the last year in order to get a baseline where we are when it comes to especially environmental, but also corporate governance. The social part we are adding now from next year to focus on that. When we acquire companies, of course, all companies like Peximec and others that are quite small, they have not ISO certificated procedures. We add that within our group in order to be more competitive. Tor Ahlgren, for example, we made an analysis from 2021 when it comes to ESG. And in a survey performed by EcoVadis, we came out at the top 5% among 90,000 companies. We see this gold medal as a very good strategy in creating growth through companies that actually have a demand on reduced CO2 emissions. So this is a really good, I think, way of how we work as a group. We're adding this kind of survey, working with plans to reduce the CO emissions, and with this we can take new customers that really demands a true ESG profile. When it comes to our investment criteria, we have a very stringent process and also disciplined when it comes to The targets we're looking at, they should have 50 to 200 million in sales, have a stable EBITDA, and that's not meaning the last 2 years, but in a period of perhaps 5 to 10 years. So we see that this is a sustainable EBITDA level, even though the latest 2 years has been quite tough for some companies. And also that they have some growth, at least 2% in CAGR. So this is, I think that's a key thing when you're doing this kind of acquisitions of SMEs, that you have to be stringent on financial targets. Also operational, we will be a partner to the CEO and the company to create further value and have a development potential. And also clear plan for management continuity or succession is very, very important, because we are working quite different from an entrepreneur, which very seldom has a board of directors or are used to work in that kind of context. When it comes to Q2, we had a very good quarter. We had 23% organic growth and 90% pro forma. About 2/3 of this growth was for volume and 1/3 from price increases. We have seen cost of materials increased, and also for logistics in last year, but also this year. We have a very significant negative dollar effect for Nordbutiker, which are purchasing goods from especially China, but pays in dollars. And that has impacted the company's profitability. We see that 3 companies still have not increased the prices in Q2 or the first half. They will do it from Q3 and forward. It's Ahlgren. Main customer there is Scania. With that agreement that we have some delay of 6 to 9 months before we can increase the cost for materials. And also Peximec and Kempo will increase from July 1st. And this is not about if we can do it, increase prices, but when we can do it. Hopefully we have a quite good opportunity now in Q3, because we increased the prices for a number of companies, but also when we purchase goods, the prices are lower. Metals have gone down about 20%, from about 20 SEK per kilo down to 15. So we can have a double effect, lower cost of goods with a higher price to the customer. We made 2 acquisitions. Solid Engineer, been around for more than 25 years, working with software for CAD simulation, CAD and also simulation. Revenue is about 100 million, and EBITDA margin of 14%. This company is also a sustainable company. We're working with efficient tools for some simulations, which mean that you can avoid making a 3D prototype when you build a car or whatever you build or design as a company, because that will mean that you reduce the cost, reduce the ECG or CO2 efficiency emissions, but also less cost. Oppo is a special company for selling and designing eyewear, own brands to 80%, revenue about 60 million, and EBITDA level of 25%. Working especially in the Nordic market. We made a DCM tap issue in May, so we have more than 250 million SEK in cash for further acquisitions. Because we see that the situation with tougher market that can make that there are opportunities for M&As if we have a strong balance sheet and also a good cash flow. End of quarter, we had a joint venture with Randers Tail, a Danish company, with a sales company, Randers Tegel AB. Sold that, 14 million SEK in liquidity effect. And our selected key metrics, market cap about 800 million currently, EBITDA pro forma more than 140, and net debt EBITDA 2.8. So we are well off there. Our target is less than 3. Some short about our financial overview. Compared to last year, we lost 1% in adjusted EBITDA margin, and that's mainly due to cost increases for logistics and cost of goods, together with the dollar effect. We see now from Q3 that we can increase the prices for the companies that have suffered from this increase for material, like Toragen and Peximek. Nordic, we still don't see the market open up for price increases, even though all companies or competitors in the market still also have the same effect of the dollar and increased prices for cost of goods. All companies had a good growth in Q2. Kempo more than 30%, Dofab more than 30% growth, Nordic close to 30%, and Bara Mineraler 15 plus. So really good growth in the portfolio. Also, Oppo has had a very good Q2, even though we didn't take that into our books from the start of the quarter, but from June 1st, we are consolidating Oppo. So very good growth in companies, specialized niche markets, which actually can grow faster than the market. The general market. The Seafire share, we have, this is some days old. We are now trading at about 28 kronor per share, 800 million in market share, market cap. We have about 3,000 shareholders. The biggest shareholder is Krades with 16%, and Berenberg and Aktier, then myself, and Parpressa Invest is Marcus Åkerstedt. So we have a lot of skin in the game. Some outlook for 2022 and also in 2023. Still, we're working hard to achieve the organic growth. Of course, in this this segment has been, or the market segment has been quite positive towards those price increases, and then with the same volume, it's not that hard to increase the organic growth. But we see still increases in volumes. Together with price increase, we could have a very good total growth or organic growth, together with also improved EBITDA level. We are focusing on sales in the companies. We added, as said, 20 reps in all businesses since our acquisitions of the company. So we have a very much better strategy and also resources to take care of any fluctuation or negative deviation in the market if there will come an economical downturn. Also, we're looking at the M&As. We have still some deals in discussion, especially add-ons to our existing portfolio. Also, we are now better off when it comes to real EBITDA, not just pro forma, and net debt EBITDA less than 3. So we are now looking for refinancing in 2023, first half, in order to significantly lower the financial cost for the group. So all in all, we still don't see any downturn in our businesses so far in Q3. We have a very good cash position and have a very good quarter behind us. So we are keeping on in creating value in our businesses, and hopefully there will be some better transparency in the market, so we see where the general economy is heading. But we are prepared for taking advantage of the opportunities out there. Thank you.
Perfect. Thank you very much, Johan. And now we do have exactly 5 minutes left. Talking about the uncertain market that we have right now and going ahead, has this in any way affected you in your acquisition dialogues in terms of perhaps in the price negotiation or something else? Is it more complicated now than last year?
Yes, it's taking more time, and also the sellers are more cautious. They don't go out or sign a letter of intent or a process before they see that they really can stand up for the numbers they are estimating for the full year, for example. So there is a slowdown in the M&A, and that's also we have 13 good companies, have a very good profit development. We are not in this situation where we need to buy another business, but we see opportunities in add-ons. We know the customers, we know the business, could be synergies, and then we actually using this opportunity to acquire companies as add-ons rather than new platforms.
Yeah.
And also we see if there will be a downturn, let's say in automotive for some years. Some of our companies we're looking at, they have they want to exit, but if they don't exit now, they have to wait perhaps to 2026 or 2027 because a downturn in 23 and perhaps half of 24, and a buyer want to see the direction, and then you are 5 years away. So that could be an opportunity for us.
Yeah. And you touched upon this during the presentation, and last quarter, Q2, was a strong quarter for you. And when you released the Q2 report, which was late in August, you said, and you also said that now that Q3 had started in a similar manner. Has anything changed since then? Do you still see a good business momentum in the portfolio, even though we have this outlook that isn't that positive, perhaps?
Yeah, we don't see any deviation at all, actually. A number of companies had all-time high when it comes to sales and deliveries in Q2. And also we see a strong momentum currently, also in Q3. And also that we have the spread of businesses, that some of our companies have had bottlenecks, or the customers has bottlenecks, like in automotive, like Scania, and also Kempo's customers, which need chassis from Iveco or Mercedes or Volvo. They haven't had a volume, so there it will not be a peak for perhaps a year. It will be more a 3 years good level, because those companies or customers, they're taking orders for 2024 and 2025 because of lack of chassis from the manufacturers. So we have a quite good balance in our portfolio. So we see that, like Lingua.com, it's still growing. We're not at all dependent on the general economy. Toragen, Kempo, and Peximek. They also, Peximek is one example. I mean, they worked with electrification, cable protectors, and if Germany should go away from gas and oil heated houses, family houses, they are in a very good momentum. They can grow significantly together with companies like Niben, and this total change in heating houses. So we see that we have been focusing on sustainable companies and business models that we see, okay, this could actually take a benefit from the situation, like electrification. So we see, of course, we will have some negative development for sure. That will hit us as well. But I think we have a quite good position and balance in our portfolio, so we could actually take advantage of a weaker market where we can take market share because we are more agile. We have more sales reps out there taking the customer, and also a strong cash position, so we actually can support with good volume on stock of goods, so we can have an instant shipment.
And finally, one last question. If we just zoom out and take a look on the bigger picture and your and Seafire's long-term vision, where do you see Seafire in 5 years, let's say, if you dare to dream a little bit, but also be realistic, of course?
I think we should have a growth, an acquisition growth with our own generation of cash, rather than making misuse of shares. And of course, we will have a net debt EBITDA level that 3 times, something like that. So perhaps it will not be 7 acquisitions like last year or 12 months from now, more than 4 to 5. And more revenue of 3 billion, something like that, and more than 10% EBITDA or EBITDA level. Being on the main list for the shares issue or for the share trading of the shares. So I would say that, and perhaps we also focus more of the industry segment, construction supplies, because we think we have a know-how. We have very, very niche companies that also can grow organically, but also looking at acquisitions. And so that will be a larger part, I would say. But perhaps 75% of all deals will be in this segment, and then 1 or 2 in the niche or trading and services. So 3 billion, and hopefully we'll also have a good multiple on that. I'm going to go to the market cap, but that's not my decision.
It sounds very exciting. Thank you very much. I think we're out of time, unfortunately. Thank you for joining us and telling us more about Seafire. And good luck going ahead.
Thank you. Thank you, Max. Thank you, everybody.